let's just say you had a house, you're paying your mortgage, then you don't have a house anymore, you're paying rent. Under the policy, what does it speak to about that kind of payments and all of that stuff? I hear it's getting very muddy right now.
Yes. So most homeowners policy will have a coverage, usually D, and that coverage is considered additional living expenses. People will call it AL. And so that is your additional cost of living that is directly the result of the covered loss. So like the hurricane, that is in addition to what your normal expenses were. So that's kind of where people get really kind of tricky about it, is that if the month before the hurricane, you were spending X amount of dollars on groceries, and now after the hurricane, you're home destroyed and you're living in a hotel and you're buying food out all the time, what they're going to cover is the additional expenses for food. So it would be like whatever your normal expenses were minus what now you're spending, and it'd be that number. It's not all of it. It's the additional amount of money. So that, and usually takes its form of you're living in a hotel, right? Or you had to get an apartment, now you have another rent. Those usually things, as long as you're still having to pay home, now that becomes all additional electricity, internet, like anything that's double now. If you still have it at your home and now you have it where you're staying now. And then also people don't think about it, but if you now have to drive a further distance because of the fact that you're not at your home, like let's say you worked near your business where you lived, and now you've had to move because of how the housing has just been 45 minutes away, you can now be entitled that now you have to spend. So it's those kind of things. That question is, what is additional because of the hurricane? And that's usually what they will cover. Now, this is another issue that we always have a lot, is that most policies require that the insured incurs the cost first.
Yeah.
So which means you have to pay for it and then the insurance company reimburses you.
Okay.
So
That's
as
so.
you can imagine, that's hard for
Yes.
most people.
I want to attack that for a second. That's so good.
Yeah.
Is all of this called or a part of loss of use, or is that a whole
Yes,
different?
loss of use. Yeah, another word for it is loss of use. Yep.
Okay. All right. So let's dive into this piece real quick, because when I went through my claim, I did not want to buy all of my appliances with the fear that this company was not going to reimburse me.
Absolutely.
That's why I lived out of that kegerator for an entire year.
Yeah.
So when you said that you actually have to incur the expense, what what's the caveat? What's the wisdom there? Because if you go out and re-rent something at $2,000 and you're driving and you now have groceries or whatever all that is, you're now out 10, 20 grand. Are there caps to this? Like, how do people get screwed over on that? I mean, that sounds super dicey.
So the caps are, your policy has a policy cap of how much you can spend. There's a certain amount of money, that number that's there. But there also is, in most policies, it will say that we're going to cover this loss of use, additional living expenses. A lot of times it'll cap it off time wise. Sometimes the amount of time that you reasonably should have been back into your house, or 2 years from the date of loss. So a lot of times there'll be a time cap while there is a money cap. And it makes it a risk. There's a lot of people who have spent money and then demanded the reimbursement from the insurance company, and the insurance company makes any type of reason. They may say the reason is we believe that we gave you enough money already, and therefore you should have fixed the property and been back into your house. So now we're not going to pay for it, even though you're demanding more money from us. We're telling you we're not paying it, and we believe you should have already moved back into your house. So that's one way that they'll try to deny the additional living expenses. Then the other way that they'll try to deny it is, sometimes they'll say that the requirement is to put you in something kind of similar to the way you were living. So if you were living in a 2-bedroom home and you go and rent a 4-bedroom home, they can say, well, no, we're not going to pay for a 4-bedroom home because that's not similar to the way that you were living before. So those are things that they sometimes will stand behind and try to say that there's a denial. So then that alone, like, let's just say you have, this loss of use, additional living expenses for $5,000, and the insurance company doesn't pay it, but they paid you for the home in full. You can still hire a lawyer who can sue for just that portion of it, because you technically it's part of your entire policy. And if the insurance company doesn't reimburse you, they've breached the contract, the policy.
Fascinating. And then before we move on to this next question, there's a loan called a 203H loan. And there's one piece of the 203H loan I have not figured out yet, and I think you might have just given me a clue to it. It allows somebody who has had a disaster impact like this. It had been previously used for COVID, but what it does is it says you could buy under FHA a home for 100% down. Okay, I'm sorry, 100% no money down.
Yep.
Great situation as long as your first home is now unlivable. They won't count against you debt to income wise for the current residence, but
Yeah.
they qualify you on the future one. So I'm now kind of curious. Would the insurance company have to, let's say it's an even Steven house, and the new mortgage is, I don't know, 2,000, and your old mortgage was 2,000. Would they pay that out, or would you still have to just make the same case that, hey, this is what I had to do. I went and bought a house, and this is my new mortgage payment.
They're just going to pay each monthly payment. Yeah.
Doesn't
So
matter
they would
what
reimburse you
rental.
for the monthly payment, the $2,000 a month.
Okay, all right, rent or otherwise.
Yep.
Okay, wow, boy, that just
Yep.
fixed the problem for me. That's great.
Yeah. Because it's an additional expense. You wouldn't have needed it if your home was livable.